Alexander.
Alex is
Alex is
just
good.
fine.
I just call
Okay.
him Wagme. He's the Wagme. The Wagme.
How are we doing today?
Good, man. Crazy morning, but pumped.
Nice. Yeah, we're pumped to have you on. So you're core contributor of Aerodrome and Velodrome, which are leading dexes and liquidity hubs on Base and
Mhm.
Optimism. I think the Aerodrome's doing 20 billion in dollars a month, so very meaningful size and scale coming through the platform. So yeah, I wonder. I'm very intrigued about the founding story of Aerodrome. So Uniswap was obviously the giant in the room, but Base was launching, and I assume you kind of saw a big opportunity in being the Base native DEX. But wondering if you could kind of start there and talk us through the founding story.
Yeah, it's pretty cool. It's one of the things can only happen in crypto and DeFi, right? I got into the industry in 2020, 2021 during the pandemic. Just caught the DeFi bug. Was playing around so much, quit my job, but didn't really have a plan. It wasn't intending to do any particular thing, but around the end of the last cycle, I was participating in a DAO. That DAO was sort of a sub DAO of the launch of Solidly, and Solidly was kind of like Andre Cronet's like last big project of that cycle, and basically in being very close to that launch, right, and meeting a bunch of other very smart, very talented people, we saw an opportunity to take what he had built, the foundations he had built with Solidly, and continue to run with it, basically improve it, streamline it into what we basically call a metadex. And a metadex is just something that brings together everything from Curve, Convex, Uniswap into a single design. And then to like go very hard at L2s, because at that point, I think ETH L2s were kind of still faded a bit. It's still very much you gotta go deploy to an alt L1. We figured, come what may with the cycle, ETH L2s were going to be where all the growth was, and that when the market came back, when capital came back, those were going to be the biggest areas of explosive growth. So this was just like five people, who met, who saw an opportunity, who saw a potential product market fit, didn't raise any money, didn't do any of the typical things that you do to bootstrap a project, and started by launching Velodrome and Optimism. And very quickly there, ramped up where, we were just this very tiny DEX, and then we were flipping Curve and Balancer and Uniswap. And then, yeah, it was just an extension of the thesis that we thought if Coinbase is going to come on chain, and Coinbase is going to put their full weight behind bringing their entire business on chain, Base is the obvious place to be. And so that's why we deployed Aerodrome there. The vision was that Coinbase was going to sort of vertically integrate this on chain economy. And of course, that is what they're doing. We're about to have every token that trades on Aerodrome trading directly on Coinbase.com, which is nuts. But it's been this wild ride because, fundamentally on any network where a MetaDex competes against these billion-dollar VC incumbents, they win about 60-75% of the share. And there is no DEX model that has done that versus Uniswap. So it's been a wild ride.
So I think you tweeted recently that the measure of a DEX isn't volume or TVL, but its ability to maximally capture and redistribute value. Uh, Curious about the sort of thinking there, if you want to go a bit deeper, but also about the mechanism that actually allows that to happen.
Yeah. Yeah. I mean, you can think about this as it's really the measure of any on-chain product. And we think about on-chain products really as you are turning firms, right? And all the tools of coordination that firms require, and that could be like businesses, institutions, into code. And if you are turning a firm into code, the only moat that you have is maximal sort of value capture and redistribution within that sort of like on chain firm. And so I don't know, we've all been through like a few cycles now, right? We all know what it means to drive, quote unquote, vanity metrics. Anybody can rent, basically an infinite amount of TVL for some short amount of time. Anybody can drop fees sufficient to put up eye popping volume numbers. And those products are usually the ones that are there for a moment and then quickly gone. So the measure of a DEX, right, and the measure of most on-chain products has to be across a number of different variables. And in DEXs, it would be obviously TVL, volume, and fees. But it also has to be like redistributing the value through the system to like operators of the token as well, right? And that's been the big gap in a lot of products. Like 90% of the top 50 coins don't redistribute any value, any yield whatsoever to token holders. So when you measure a DEX, right, you need to look at all of those and then look at the amount of value that is being captured and redistributed to users of the product. Because if you leak any value, if you extract any value, that is value that a competitor like us can go capture, can internalize, and redistribute to users in such a way that you can vamp away the activity from somebody who is, say, taking a fee on the front end and redirecting it to a private entity, right? Why wouldn't that just be redistributed back to users? And isn't that now just fundamentally a bounty for any competitor to go take that, do something more aligned with the values of the space, deliver more value for users, and then basically take them over? So yeah, that's how we think about it. You have to maximally capture value. You have to redistribute the value. And you can cut through so much noise in the space if you just look at the ability of the token, of the protocol, of the project to capture value and redistribute it.
Can you tell us about the maybe token mechanism there? Because I think that is obviously core to this redistribution.
Yeah, I mean, it's really cool. So I think it's fun to talk about kind of what the history of DEXs is to get here, right? So Uniswap was obviously the pioneer here, right? And they imagined just a sort of two-sided marketplace, right? Traders pay fees in order to trade, and those fees go to liquidity providers that are putting up the tokens on the other side to make those trades possible. But what happened to Uniswap was Sushi deployed. They added just a little bit of extra reward or bonus, right, on top of the fee distribution. And they took half of Uniswap's TVL in 1 week. So incumbency in this space, right, basically doesn't exist. If you can lose, be the market leader and lose like half of the capital deposited in 1 week. That just shows how much even a little bit of extra marginal value can push things. So that's why Uniswap ended up deploying their token. But both Sushi and Uniswap never found a way to basically add value to the token sufficient that it could continue to be used as a reward. Because if you're just spending a token, then obviously, like, we know the path of that, right? It's kind of down forever. So Curve was like the next pioneer here, right? And we model some of what they did, which is that they said, hey, what we're going to do is we're going to take a percentage of the fees that LPs generate and direct it back to those who lock the token and participate basically in the governance of the system. And the governance here isn't like snapshot votes or like things like that. This is on-chain governance and like redirecting where the new tokens, new emissions go, which is also very important because that allows you to like bootstrap pools that can't do fees. It allows you to basically accelerate like vamping certain market share and things like that. So they like sort of split the difference. Some fees to LPs, some fees to token, but big improvement over something like Sushi where, there was nothing basically supporting the incentives that they were pushing out in the form of the token. And so our system basically went a step further. And it said 100% of the current and future revenue of the protocol. And by the way, yeah, that's trading fees, but that's also things like projects incentivizing. That could be things like front end fees, auto compounder fees. This could be all this value that DEX leaks. You redistribute all of that today and in the future right back to the folks who lock the token, who vote each week to optimize the system and distribute those emissions, such that, now the token is a claim on everything, right? As long as you are using it to participate. And that's what makes the system work very well. You are basically like rewarding LPs with this thing that represents all the current future value that the DEX could create. And they can go sell that. But you're also going to have people who are going to be interested in going and taking that, locking it, and voting each week and earning back the full productive capacity of the protocol. And that's why I think you see metadexes take such dominant share. Like anybody who's capped in what they can like reward and distribute on only the fees that are being generated in this current moment are fundamentally just leaving value on the table that they could be redistributing to users to gain market share.
I love
Well,
that.
there's got
I
a
love that
history
story
lesson.
time. It was
Let's
so
go.
good. I forgot
Yeah.
I was even on a show.
Yeah.
I'm just sitting here watching a
Tell
movie
me
right now.
more, Alex. Tell me more. What else can we dive into?
Yeah, so I was looking at your bio, and it says you're the CEO of Redacted star Labs, and then you also wrote a tweet that said shared systems would create shared value, no permission flows, no privileged stakeholders. As firms would distill decode, the only moat is max value to users. Every dollar extracted is a bounty. Redacted Labs will accept that bounty this fall. Is there anything you can say about this next chapter?
Not much yet. But I mean, what I will say is like we now see metadexes across 11 chains, right? So you've got Aerodrome on base, you've got Velodrome extended across 10 different optimism superchains. And on basically each one of these, yeah, if you look at the important metrics like volume, fees, things like that, they are earning about 60-70% of the market share versus everyone, right? And, it's no small feat because Uniswap, is worth like what, $9 billion? Curve, Balancer, Fluid, these are like major protocols with a ton of resources. And they've struggled to compete anywhere that the model exists. And so for us, I think we are just thinking about the fact of now that the model has truly been proven out, right? That this is the first thing that we've seen since Uniswap that has the ability to capture this much share, and that these competitive advantages, right, and its ability to maximally sort of capture and redistribute value have been shown to work just about everywhere. We're just thinking about how much bigger this could go. And we're also thinking about the fact that DEXs are a really interesting outlier if you think about the different verticals in DeFi, right? If you're looking at perps, if you are looking at lend borrow, and like you are out there saying like, man, I want to bet on the growth of Aave deploying everywhere and winning all that share and redistributing value within its system, you've got kind of a natural proxy just for the growth of lend borrow. And by the way, like I think lend borrow is going to continue to grow maximally. Like Coinbase has built an entire product for their users, built on-chain rails, Morpho rails, allowing them to borrow against their Bitcoin. You're going to see more companies, I think, distributing like the benefits of these on-chain things. And isn't it kind of weird that if you are kind of like betting on things like more centralized exchanges integrating on DEX rails, there's sort of no single token that has any sort of like real on-chain utility or redistributes value to incentivize the use of that token right now. So there's like no way to sort of take a bet on like the index of DEXs across EVM as we are seeing the DEX share against centralized exchanges like grow, as we are seeing centralized exchanges distribute to millions of their users DEX rails because it allows them to just like orders of magnitude distribute more at a lower cost. And there's kind of just no way to get involved in that. And that seems like a major like opportunity as well for us. And frankly, I mentioned the of the top 50 tokens, only about 10% redistribute any sort of like yield to token holders. I think it's actually a public good to show that tokens that are built right, that didn't raise any money, that distribute the tokens maximally, to their users, that didn't even allocate to the team. Like I don't have any liquid vesting tokens as a team member. Nobody on the team has liquid token vesting tokens. And like, we think this is a better model. And if we can show a better model can be like number one in a vertical completely, we think we shake a lot of this excess sort of like value and speculation out of some of these like legacy Dino coins. And it gives like an opportunity for every single builder who's trying to actually build real DeFi stuff to potentially, benefit from that. But like, I would see our success if we looked at things next year and it's like 50% of the top 50 were protocols that look more like us, right? Like that weren't allocating shit to insiders, weren't selling tokens, we're maximally redistributing value, not extracting things to like separate entities and splitting the equity and on-chain structures. Like, and if we can like kind of help be the case study on that and inspire the whole industry, I think that's like critical to the industry winning and outcompeting TradFi. Because if we're just the same thing but worse, what are we doing here, right?
What do we do? I mean, I think there's probably a lot of participants that have come into crypto over the last, say, year or so that maybe haven't been exposed to this type of thinking and idealism, if you will. Like, I think it was very prevalent in 2021. Also, kind of, I think, got over our skis there quite a bit. And even I think the token model that you guys are talking about, there's a bunch of open questions around sort of the VE token models, etc.
Mhm.
But what was super interesting was that we're experimenting with new things, and that there was I think deep appreciation for what new things could be built on chain. And I think I very much agree that I think the wrong thing to take from the last, say, meme coin cycle is that people just want to speculate on stuff, because I think there is a deep dissatisfaction with the world, and that really underneath all that is hope that there's something better for me, something better for my community, for society, etc. And so I think there's a yearning for these types of things, and yet we just haven't seen great examples of them up. So very excited to just both hear this coming from your mouth, and I think it's a conversation that's going to continue to grow over the next little while. And I mean, you definitely have me intrigued about what might come next.
Yeah, and I'll do a little plug because I gave a talk at ETHCC, kind of laying this out in sort of a much more complete form. But the one thing I'll say about it is that I think for us as an industry, it's not just a moral necessity, and I think you're right in identifying, right? Why people became so disenchanted in anything other than sort of memes, and that's kind of the moral piece of it. But it's a strategic necessity, because if we're actually going to go out there and disrupt some of the largest businesses and institutions, and really it's anywhere value in these old systems can be disintermediated, that we can win. And so this is social, this is TradFi, this is FX, this is banks, this is all this sort of stuff. If we are actually going to beat them, it's a strategic necessity that our products are better. And if you look at the state of things right now, most tokens look like the worst businesses in any category, in any vertical, in traditional markets. And that's not how we beat them, right? We cannot look worse. We have to look a million times better, because, these guys are powerful, we've got to do it. It's a strategic necessity for the space.
But we have stocks on chain, Alex.
Yeah.
We've got stocks on chain, baby. We can go. You can buy crypto on the stock market.
Yes.
I'm
Yeah.
being very facetious here. I think we have this sort of internal 2x2 that I like to use. It's like founder persona, if you will. And on one side it's boomer and degen on sort of the X, and ideologue and pragmatist on the Y.
Yeah.
And I think we often get too far out on one edge, and really the mix of strategic and ideological sort of thinking is absolutely key here. So I love hearing this. We'll definitely share the video if you want to send it our way. We'll include it in some of the roundups and stuff, because I'm sure people would like to go deeper. All right, man, we've taken enough of your time today. Really appreciate you hopping on and sharing the vision. And when you got something new to share, let us know. We'd love to share it with our crew.
Sounds good. Yeah. Stay tuned this fall.
Coming this fall. Thanks, Alex.
Thanks for coming on, man.